travel, shopping, and a taste of the high life. Aspirations of the middle class. But imagine taking on debt to fund this lifestyle.
The data is very stark. Below the age of 30, 70% of Indians have at least one loan.
Personal loans are climbing fast among India's young.
I did not have any other option but those loans, and that was one of the easiest and the quickest way for me to get money at that particular point.
They splurge more while saving less.
If I could just afford a coffee or some drinks with my friends, I would splurge the 1,000 that is left in my bank account.
What's driving these young adults to spend money they don't have?
It comes from a place in a developing nation where most people don't really understand money.
I think we're also sort of coming face to face with how technology is such a double-edged sword.
And will bad debt cripple the next generation?
For a few months, I lost hope. I was like, how do I repay this?
Pooja Matka is a young business owner in Mumbai. She's also a huge fan of Coldplay. Last year, when she missed out on the band's gig in her hometown, she didn't give up.
We got to know that they are doing a show in Ahmedabad. I have a friend who's a Gujarati, okay, and he has a house in Ahmedabad. So I was like, he was like, I got the tickets, so if you want to come, let me know and everything. 2 days prior to the concert, I was like, let's take the call and let's go for the concert. What's going to happen? It will be a new experience altogether. Basically, when you enter the concert, they give you a band and they also give you glasses. When you wear the glasses and when there's like a light popping, you see like hearts are made in front of you. And basically, they said that you have to return the glasses, but I think I was like, I'm not going to return because it was my first outdoor out of Mumbai concert experience, and it was like one of the beautiful memories that I have.
In all, Pooja spent 3,500 rupees, roughly $37 for the ticket, as well as travel costs. Not too much, but at that time, Pooja was struggling with finances. But for Pooja, it was worth it.
I will never regret, or I will never feel bad for spending on these concerts, because they are like that experience that I get. Like, it motivates me to work more so I can make more money and I can have more experiences like this.
In the world's fastest growing major economy, the young are developing a taste for the finer things in life. By 2030, Indian Gen Zs and millennials are expected to make up over 75% of India's luxury market. As for travel, this group accounted for 9 out of 10 international trips in 2025.
Basically, I have a book which is like 50 things you want to do, like a bucket list book. There are more concerts that I want to do outside India, but I think this is the start.
The problem is, not all young Indians can afford their aspirations. Some are funding their lifestyle through debt. For example, about 70% of iPhone purchases are financed through credit. Credit card debt reached an all-time high in 2025, with urban young driving this growth. And in 2024, almost 4 in 10 Gen Zs reportedly borrowed money for necessities like rent, groceries, and utilities.
In the post-COVID era, what we are seeing is an explosion in middle-class indebtedness. Whilst the indebtedness is across age groups, in the sub-30 age group, the incidence of indebtedness is remarkable. 70% of Indians below the age of 30 have now taken at least one loan.
I started taking loans after the whole pandemic situation. There came a point where I had nothing. I was not getting a job and nothing was happening. For basic necessities also, we had to take those loans.
In general, Indian households are borrowing more. Household debt stood at 41.3% of GDP as of end March 2025. up from the 5-year average of 38.3%. With the younger generation, what bears examination is the kinds of loans they are taking. When economists talk about debt, they typically differentiate between two categories: productive loans and consumption loans.
A productive loan will be I take a loan and buy a house, right? I take a loan and buy a car or a motorbike. There is some productive asset that has been created in the economy. By and large, if you buy a house in India, you're creating a decent asset for yourself. Or if I take a personal loan and go to watch a Coldplay concert, ठीक है, वो हो गया, that's a consumption loan, right? There is no productive asset behind it. You could argue that my going on holiday is a productive endeavor, my long-term mental health will be better, arguably, but the central bank or economists don't see it like that.
So, what loans do young Indians take? According to Paisa Bazaar, a credit comparison platform, in the first half of 2025, the top reason for personal loans is to travel, a phenomenon driven by the youth. For Pooja, although she did not need to borrow for the Coldplay concert, their expense came with an opportunity cost.
I don't think so that the earnings or the money that I'm making right now is enough to supplement the lifestyle that I've built for myself. Right now I'm just living from the point that bills to bills are happening. Eventually, if I'm not taking the trip, I have that money saved. I could have put it, invested somewhere. I know that it's again a very not a great decision that I've made, but yeah, I then used that money, but I gained an experience out of that.
By June 2025, active loans had risen more than 25% year-on-year, reaching above 2 trillion rupees. That's roughly $22 billion. Fintech lending is growing rapidly, but there are signs of stress. As more people take on debt, delinquency and default rates are on the rise. Compared to last year, loans overdue by more than 180 days are climbing.
Young Indians tend to take a lot of smaller amount loans, right? Because of the accessibility and all of that. So the main reason they are defaulting is because they themselves don't realize how many loans they have, right? They do not check the overall terms and conditions and the cost behind each loan that is there.
I think it's also a culture of saying, well, what's the downside? Let me default. If I default on this money, no, it's not my own. It's your money. It's your loss.
Owning a credit card has become a bit of a status symbol. Credit card, you postpone your spending. It's a simple logic, okay? So you spend more than you have in the present. Forget about the future because everything is now the present. I think it's the issue of aspiration and affordability and that gap and your actual lived reality.
Interest rates on small personal loans in India range from about 10% to around 30% per year. If repayments are missed, late fees and penalty interest can quickly add up, making the total cost of borrowing significantly higher.
The moment the due date used to start coming closer, I used to be like, how can I get work? What can I do? How would I get into this whole situation where I am trying to pay off everything? Mentally, it was a big struggle. I have had major breakdowns. So it just went like deep. And I just got into that particular loop.
And yet, even with that pressure, many continue to spend. So, why are some young Indians borrowing for indulgences they cannot afford? When Shava Mane stepped back from freelancing to focus on a creative business last year, financial pressure quickly followed. Whatever the business earned went straight back out on necessities and taxes. But like Pooja, the 28-year-old also decided a concert was worth splurging on, a decision Shava's mother was not fond of.
So when she was like, why do you want to do a concert when you can actually keep that money for yourself? And I was like, this is the time where my peers are going. So I just want to go, enjoy the night, be at my friend's house, party till 5 o'clock and then sleep.
आत्ताच्या मुलांचं कसं आहे, जेवढे पैसे घेणार आपण, जो पगार येतो तेवढं उडवायचं, उद्या दुसरीकडे हे करायचं, मागायचे, असं असतं. आमच्या जनरेशनचं कसं, जेवढे मिळत होते तेवढे आम्ही उडवत नव्हतो पैसे. जे मिळत होते तेच थोडे बँकेत ठेवायचं, बाकीचं खर्च करायचं.
There's a generation shift in how younger Indians perceive debt compared with their predecessors. In a survey of young Indians by M-Pocket, a digital lending platform app, more than 6 in 10 respondents said that using credit gave them greater control over their finances, reflecting a more positive attitude toward debt.
Earlier generations thought that loans were a matter of shame. Something that was seen as a shameful thing is now seen as something that, okay, I am eligible to get a certain amount of loan. Second, earlier credit taking loans was an entire process of months or weeks, right? Which now is just 3 clicks away. You click on a button and by the next minute you already have the loan.
Young Indians are also borrowing earlier than ever. Paisa Bazaar found that those born after the 90s are taking their first loans in their early to mid-20s through credit cards, personal loans or consumer purchases. In contrast, Indians born in the 1960s and 70s did not borrow till much later in life.
लोन का क्या, अपने पास ज़्यादा पैसा होएगा, अपने को मालूम है हमें इतना हर महीना में दे रहे तो ले सकती है अपन. कहते अपना कमाने का कम और ज़्यादा लेने का कुछ फ़ायदा नहीं, अपन ही फंस जाएगा उसमें. कमाई कम है तो क्या ज़्यादा लेके क्या करेंगे, ऐसा भी है ना.
Part of what sets these generations apart is the world they grew up in, an India whose economy has been steadily expanding. 30 years ago, India's GDP per capita was around $400. Today, it exceeds $2,800. For many young people, this means starting life in a better financial position than their parents, which shapes their expectations and aspirations.
So, Maslow's hierarchy is a theory that basically says that human needs are sort of stratified, that there are some basic needs and only once those basic needs are fulfilled that do we move on to seeking fulfilling more higher order needs. So basic needs like physical safety, food, clothing, shelter, and then moving on to higher order needs like belongingness, a sense of self-worth, community, identity, all of those things. There's definitely some value that the theory adds to looking at this behavior specifically in terms of spending. But in the Indian context, or in any human context for that matter, these needs are not sort of static categories that only once X need gets fulfilled do people seek out Y needs. It's coexisting and people move from one need to the other as and when it is getting fulfilled, not getting fulfilled, frustrated, and so on.
So just to give you a quick explainer about this, there is a term called as Gen 1, Gen 2, Gen 3. Gen 1 is people who are just now starting out. They are doing their first job, maybe they are starting their own business. Now their goals are going to be a lot with building their first house, taking care of their children's education and all that, right? When it comes to their children, their goals will change. It won't be building the house because that's already taken care by their parents. Their goals would be more about taking the first foreign trip, buying the first luxurious bag, the first car for the family and all of that. With Generation 3, now things have again become more about their wants and not needs, right? Their goals are going to be many more luxurious items and all of that.
In Maslow's hierarchy, experiences and luxury goods can be seen as fulfilling self-esteem or self-actualization needs, with some arguing that this trend is amplified by social media.
Typical Indian spends 5 hours every day on social media, and there's lots of research which shows that the younger you are, the more impactful social media is in terms of hitting up your brain. That someone earning 500,000 rupees a year, $5,000 a year, wants to live much the same life as the billionaires of South Bombay live, because very cleverly curated images on social media are feeding into their brain for 5 hours every day that this is the life you deserve, this is the life you can live, whether it is having 300 rupees cups of coffee, whether it is taking holidays using loans or attending concerts with borrowing. All your friends are saying they're attending and you feel that, hey, there must be something wrong with me if I don't have the money, therefore I should attend, even though you have no money.
You can endlessly scroll and keep getting hits of dopamine. There is no delayed gratification. It's instant gratification that they're looking at.
In Mumbai, Shava has met up with some friends for coffee.
For me, it's about just escaping, honestly, because I stay with my mother and father, so every day is a hustle to just get out of my house. So if I could just afford a coffee or some drinks with my friends and have the sense of community, I would splurge the 1,000 that is left in my bank account. So I wouldn't mind spending that. I don't think it's about the FOMO, honestly, because we are the first generation with so much of easy money and also hard money at the same time. So we also want that experience. It's not that, oh my God, I'm going to miss out on something. It's like, when will I do it then?
Peer pressure is a thing. I feel like I'm getting old. I don't want to miss out on things. What is more important? Should I have fun or should I save up because I don't have money?
One of the basic human needs that we have is to feel connection and to feel a sense of belonging. FOMO plays a big part in that for young people, where it just feels like if I am not following what the popular trend is, that means that I'm going to be neglected, my needs for connection are going to be frustrated, or I'm going to be a social outcast. So these are also the fears that motivate Gen Z to sort of follow this consumption as coping method.
The other piece of the debt puzzle is also how much things now cost. For the last decade, inflation in India has been moderately high. It hovered between 4 to 6%, higher than the 1 to 3% experience in much of Southeast Asia. When accounting for inflation, one ratings agency found that real wage growth was flat in the first half of this decade.
So incomes have barely moved for the middle class. They've been roughly stable at the 10.5 lakhs per annum level for a decade. In that decade, our estimate is that cost of living for the middle class has risen at 8% a year. So for example, medical inflation, cost of say getting a standard operation in a hospital in a big city, is rising at 11-12% a year, right? Even more remarkably, cost of entry-level bikes, right? Cost of entry-level cars are up 50% in 5 years. So if your cost of living has risen at 8% a year, but your salary has risen at 1 or 2%, that means every year in real terms, your pay is shrinking at 4-5%.
So India is growing, and then you have all these amazing consumer products, AI coming up, etc., etc. It's not an aspiration to have things, but it's an aspiration to come up from where you are. Borrowing for a bit of conspicuous consumption, so people can see. You know, it's not something for yourself, but it's something which you can show others that you are not as limited as you actually are.
However, that's not to say that young Indians are only taking on debt to splurge. According to surveys, they are also more willing to invest and take education loans than previous generations. That's the path Srinanda chose when she decided to continue her studies.
I wanted to hit certain milestones by a certain age, and I decided that instead of a full-time MBA, I was gonna work and do an MBA on the side. It's an 18-month program, and that way I was paying off the bills while I was also enrolled.
Still, to fund her MBA at the Indian School of Business, Srinanda needed to borrow from the State Bank of India. She pays a fixed amount every month, what's known as an equated monthly installment or EMI.
So my dad did pay a upfront amount of 8 lakhs, so I am paying off around 25-27 lakhs with interest and principal and everything included. I think the biggest trade-off for the EMI has been traveling. I've not traveled, I've not taken a fun trip.
Currently, there are about 2 million active education loans in India, with total outstanding loans exceeding 1.3 trillion rupees, roughly 16 billion US dollars. Some private lenders are also reported to charge relatively high interest rates compared to public sector banks.
Education loans are rising at 15 to 20% per annum. Much of those loans will result in a serious challenge for those families because the unemployment rate for graduates is already high and it might ramp in the next decade as AI eats up many of these white-collar jobs.
I certainly hope taking the massive education loan pays off. These are simply risks you take. Maybe the next 10 years is going to be spent in corporate, and if I have to scale up here, I need a credible degree.
While young Indians borrow more, there is also the question of who is doing the lending. Is easy credit to blame for pushing young Indians into debt? Vaishak Sudhakaran is a fraud supervisor at an American credit card company. But a few years ago, at the height of COVID-19, Vaishak found himself caught in the debt cycle.
The first time that I took a loan was around the second phase of COVID. I was working a full-time job, but suddenly the company just shut down overnight and they just called me and informed me that you do not have a job. And I was stuck at a place where I had to pay for my bills, pay for my rent, and I had to take care of my family as well. Without backup savings or anything, or without wealth from my family, I had to resort to taking loans because I could not find another job. And that was the first time I applied for a loan.
Desperate, Vaishak found himself drawn to loan ads on social media. These credit apps offered what banks could not: speed and simplicity.
Taking loans from an app sounded better back then because of convenience, Quick money, number one. The screening process was not as stringent as banks. They would just want you to take a selfie. They would not even verify your address. And quick money. Within 24 hours, you have money in your bank. So if I need something urgently, apps were much easier.
These apps are part of a fintech lending boom in India. Fintech lending refers to digital platforms that use technology to quickly assess credit and issue loans. Consultancy firm EY projects that India's fintech industry could grow by 30% by 2029, with digital lending driving much of this expansion. Kunal Shah is the founder of Cred, a fintech credit and payment platform. It encourages users to pay their bills on time through rewards, gift cards, and upgrades.
If you understand finance, it comes from a place in a developing nation where most people don't really understand money, right? Most people have become affluent for the first time, come from lower middle class or middle class, just started to see some money. Money is a subject that we learn through experiences, and therefore a lot of us go through bad experiences before we learn anything good about it. So at core, what we're trying to do is, can we ensure that there is not enough, there is enough protection and not bad experiences that drive this thing?
Our traditional public and private sector banks, they have focused more on a lot of legacy loans, on a lot of loans which require heavy collateral-driven funding. But with the younger generation who do not want to own a lot of assets, I think for them, fintech also works because they would want small ticket loans. We could call them like micro loans or sachet-based loans. They want to spend money on experiences. They want to spend money on their day-to-day needs. And for that, they want micro sachet-based loans.
So, one reason Gen Zs and Millennials are the fastest growing borrower groups is how easy it is to apply for credit now.
I think we're also sort of coming face to face with how technology is such a double-edged sword that it can offer so much convenience.
With every impulsive thought, they're taking another loan because of the low-cost EMIs. Because of them being such small loan amounts, they are not that attentive to paying it back on time.
Eventually, Vaishak took multiple loans, ranging from 5,000 to 30,000 rupees from different platforms.
Keeping a track became difficult because the names of the apps were not really matching with the name of the company that were offering me. I'm not sure which one I'm paying to. And later I would get to know that, oh, the auto payment has been debited and you've already sent it, twice. And then they would take another 3 months to reimburse the money. And, you don't realize how you lose track eventually. If it's a bank loan, you can call the banker and be like, what is this? But here, when you're trying to contact the people, there's no one responding. You do not know whom to approach to ask these questions.
A common offering by fintech lending is Buy Now, Pay Later, or BNPL. This is a payment option that lets customers purchase goods without paying the full price upfront. Instead, they pay in interest-free installments over weeks or months. However, research suggests that users of BNPL are more likely to spend beyond their means, buy more frequently, and purchase on impulse.
I think that we are not hesitating anymore to purchase because it's like, okay, it doesn't feel like you're spending too much. You don't realize you're spending more money eventually by paying the interest or whatever, right?
It is very scary because what if tomorrow I don't have a job? What if I miss the EMI date? And it's very real. This fear is very real.
When we look at BNPL, there are hidden costs, there are processing charges, which again, lay person may not understand. And if there is even a single default, he or she might end up paying 10% of their outstanding just as a revenue or just as a return to these fintech companies. And it is really concerning to see with the recent RBI data as well that 97% of the younger population resorts to it.
According to reports, people under the age of 35 account for about 2/3 of fintech borrowers. So the lending platforms primarily target younger consumers in their marketing.
See, I'll show you something interesting. I was just talking about loans for 10 minutes and you can see ads have already started showing up on my Instagram. Every second ad is a loan request. Okay, so now look at this one. It says instant loan up to 5 lakhs and they've even mentioned no income proof required, instant dispersal, zero paperwork. So that means anyone can just take a loan.
I understand that a lot of fintech companies use marketing and advertising in a way that would push the younger generation to take on debt and to take on undue credit, and that could lead to a vulnerability trap or a debt trap. What we need to do is we need to cap individual credit risk profiles in terms of the lending or loans that they will be taking.
We have to understand that a majority of credit in this country is actually serviced by banks. A very small percentage actually comes from fintechs and NBFCs, right? And for a country of 1 billion people, we have a long way to go before we kind of use these words of blaming fintechs. What fintechs have done is ensured that banking has reached hundreds of millions of customers, which was otherwise restricted by having to go to visit a bank branch and so on and so forth.
Nonetheless, after numerous complaints, regulation is just starting to catch up with fintech lending. The Reserve Bank of India acknowledged that the digital lending sector was growing in an unregulated manner. So, in 2022, it introduced digital lending guidelines where only RBI-regulated entities can lend money. It would later also tighten lending rules. The government has removed thousands of illegal loan apps from app stores.
I think a balance between strict enforcement of reprimanding bad financial behavior and reward for good financial behavior is what we need in a country like India. The most important thing is to ensure that whatever hiccups are coming, they are putting in policies, they are putting in the practices, bringing fintech companies together, having a more self-regulated and a well-regulated environment will really help us to prevent any such credit-based systemic collapse for India.
You have to understand that 90% of people who have credit cards today are probably the first members in their family to get a credit card, right? So there is nobody to guide them. on how to use them correctly, make sure that you don't spend beyond your means and so on and so forth. So I think what happens is that every country that has the early adoption of credit, any form of credit, ends up having some kind of a misfires here and there. But I think there's enough regulatory framework, enough guardrails that ensures that more and more companies getting licensed, more and more companies getting kind of reviewed, penalized for any bad behavior they kind of create. The net result you want has the credit ecosystem actually help the consumer or cause harm to them.
But the problem is not just about lending. It's also about debt collection. A survey found that over a third of borrowers faced harassment from recovery agents. When Vaishak was unable to pay his loans, the credit platform sent debt collectors after him.
There were extreme steps these loan apps have taken, like, coming to your door and telling your mother, like, kidhar hai wo. There were 500-600 missed calls in a day on my number, on my dad's number. I've had days where I've stolen my dad's phone just to make sure that, he's not picking up any calls.
Even when faced with harassment, many borrowers don't come forward.
Culturally in India, there's so much sort of hush-hush around finances. Money is such a taboo topic because it's tied up to self-worth too much for a lot of people. So if you're not doing financially well, or if you're struggling to sort of manage your finances, there is shame and guilt. A lot of the times, usually people isolate. They don't want to talk to their family members about it. They don't want to talk to their friends about it.
In a quiet village of Aranad, one family is living with the tragic cost of debt.
അല്ല സുഹൃത്തുക്കളൊക്കെ ഒരുപാടുണ്ട് പക്ഷേ ഒരു ആൾക്കാരുടെ ഇങ്ങനെ ഒരു ലോൺ ഒരു എഴുത്തെങ്കിലും എഴുതി വെക്കാത്തുണ്ട് അതല്ലേ.
Unbeknownst to his family, 21-year-old Anand had accrued debt amounting to 30,000 rupees. Unable to pay, he was hounded by debtors.
നിന്റെ കൗണ്ട് ഡൗൺ ആരംഭിച്ച് നമ്മളെ കൈകൊണ്ടാണ് നിന്റെ മരണം അന്ത്യം എന്നൊക്കെയാണ് മെസ്സേജ് അവൻ്റെ ഫോണിൽ അവസാനമായി വന്നതെന്നാണ് പറയുന്നത്. മോർഫ് ചെയ്ത ചിത്രം കാണിച്ചിട്ടാണ് പൈസ ചോദിച്ചതെന്നാണ് അവർ പറഞ്ഞുള്ള എൻ്റെ ഫോണിൽ വന്നത്.
Unable to bear the stress, Anand took his own life. But the harassment did not stop.
ഇത് അയച്ചു കൊടുത്ത് അപ്പോഴും ഇത് കഴിച്ച് ആശുപത്രിയിലാണ്, വെന്റിലേറ്ററിലാണ്. അതിനുശേഷമാണ് മോക്ക് അയച്ചു കൊടുക്കുന്നത്. മോൻ മരിച്ച് 9-ാം തീയതി മരിച്ചതിന് ശേഷം ഇന്ന് വരെയും അതിൽ കോളുകൾ വന്നു. മാനസികമായിട്ട് തകർന്നുപോയി. എല്ലാ പ്രതീക്ഷയും അവനിലായിരുന്നു. എല്ലാം നമ്മൾ ഇങ്ങനെ നമ്മളെ മക്കൾക്ക് ഇങ്ങനെ പറ്റിപ്പോയി. നമുക്ക് അവനെ തിരിച്ചു കിട്ടൂല. അതുകൊണ്ട് ഇനി ഒരു കൊച്ചുങ്ങൾക്ക് ഇതേപോലെ ഒരു ഇത് വരാൻ പാടില്ല. ഇനിയുള്ള മക്കൾ ഇത് കണ്ടു വേണം വളരാൻ.
As more young Indians sink into debt, what will be the outcomes for this generation and beyond? Debt is a necessary part of the economy. Borrowing allows for investments, growth, and covering short-term needs.
So what is credit for? Is it something which is going to produce further economic growth or even issues like health? So your developmental indicators increase. If it doesn't, then it is just what we say, all in the air.
But for those just starting out in life, taking on that debt early can have long-lasting consequences.
Because I remember the initial first year, I was doing the repayments quite, on time. I never saw my credit score even going up by an inch. But then eventually one failed payment and then dropped by 10 points.
Credit score, to put it in a very simple way, is the number that you get by credit rating agencies. On the basis of your credit score, you get your future loans, right? If you have a higher credit score, it shows that you have a good borrowing behavior. And that's when you get future loans at a lower rate of interest.
The RBI's financial stability review is showing a clear downshift in credit scores. It suggests that borrowers are getting more and more indebted.
The most important thing to kind of spread a financial awareness about is to tell people that this default will not only lead to higher charges, higher cost, but it's going to directly affect your credit score. And probably this will also damage your financial reputation, and it will deter any kind of future loans that you want to take.
Globally, studies suggest rising debt burdens among young people can affect their long-term financial stability.
When you enter the debt market very early in your life, you have EMIs to pay. That leaves very little money for you to invest or save beyond having to pay off your debt.
Accruing debt so early on in their life can actually impact the decisions that they might be making financially or otherwise in their life going forward, because then you're coming from that space of insecurity and anxiety that you're making all of these decisions from. And financial trauma is a real thing.
In India, household debt has risen significantly faster than household financial assets in recent years. And more than half of these loans are linked to consumption rather than long-term asset building. Economists warn of broader economic risks.
So it's something which is going to break at some point of time. Your indebtedness levels have increased hugely. Savings have collapsed. I would call it implosion.
There's no point the government exhorting people not to borrow money. I don't think that's going to work, right? Well, I think where we need to be careful is where you dramatically extend credit for a decade or so, everybody goes into party mode, you have a giant stock market rally. When that bursts, the aftermath is extended, it's ugly, it's painful. It all looks good until one day when someone pricks the credit balloon and the whole thing explodes in the space of 30 days.
Apart from calls for more regulations, what also matters is where young Indians are turning for financial advice. A 2025 survey revealed that more than half of Gen Zs rely on financial influencers or finfluencers for guidance. These content creators provide advice regarding money management and investing. However, a study by the Chartered Finance Analyst Institute raised some concerns. For example, more than 6 in 10 finfluencers fail to disclose sponsorship or financial ties. And recently, the Securities and Exchange Board of India, or SEBI, took down over 120,000 misleading social media posts.
Post-COVID, we've seen a boom in terms of both the number of influencers as well as influencer content. Only 2% of influencers are actually registered advisors with SEBI, as is required. Regulators have already shown concern over the increased number of young people investing in high-risk assets like futures and options, derivatives, without properly weighing the risks associated with such asset classes.
Engagement, likes, comments and shares. So the language that will be used there will also be to grab attention. Do you want to take the advice for your money from someone who's making that content not purely for your interest, right? It is so subjective. So how can you listen to a random or a particular reel that is out there on social media and think that is the right advice for you?
According to the World Economic Forum, only 27% of Indian adults are financially literate, far below the average of 52% in advanced economies.
So, financial literacy has 3 layers, right? The first and the most important layer is knowing the very basics. Second layer is your behavior. You need to understand that why are you someone who tends to have a lot of impulsive purchases, right? So addressing your behavioral patterns after understanding the basics. And the third and most important thing is knowing and ensuring that you're not being missold. There is a very big difference between people who are actually here to sell you financial products, and then there are people who are genuinely giving you advice when it comes to money.
I think I'm very illiterate when it comes to finance because even now, at this stage, no one really taught me. No education system, school, college, ever I've been taught how to handle my finances better.
India's 2020 National Education Policy encourages financial awareness as part of the curriculum. However, implementation is uneven. And surveys found that Indian students have low understanding of subjects like interest rates, loans, and repayment.
It's really hard not to participate in capitalism. But I think one of the psychological ways to approach it definitely is to create awareness around consumption, to create awareness about what is healthy and what is harmful. And to talk about that not just in on social media but also in institutions, right from schools and colleges.
Perhaps changing the way the young generation perceives spending is just as crucial.
I have made sure that I go low with my spendings. I don't spend the way I used to do before because I have roti, kapda, makan, the three essential that I need.
It would seem like Gen Z is more focused on short-term outcomes than long-term. Consumerism becomes a way to feel good, at least for short bursts of time.
Do I really need iPhone 16 or 17, or can I do with my battered 6-year-old iPhone SE? By the way, I can. And do I need a car, or can I do with a hired taxi? I think I can. So an entrepreneurial focus is on frugality in personal life, frugality in business, rather than ostentation.
And for some, their experience with debt has got them rethinking how they spend and what it means to borrow.
I think taking loans from these loans, like small loans from these loan apps, have put me into a habit ki I have always made sure that I've paid it on time, so my credit score is built. Because I was like, if I want to do business aage jati, I'll have to show that credit score if I want to take a bigger loan. But yes, it did make me learn a lot of things about finances, that I have to be more particular and careful, and I don't want to get into the same loop.
As for Vaishak, after almost a year, he has finally paid off his debt. The experience, he says, has made him a lot more careful with his finances.
So just last month I've cleared all the loans, and now is the time for me to start saving up, because I've realized one more thing, that not having a backup really messed with a lot of things. But now that I have the entire money coming to me and I can prioritize on investment, I'm looking forward to getting into something like that.